Hi, Dmitry there. In one of my previous videos on the channel, I mentioned that Fundrise is amazing and easy way to invest in the real estate, even if you have just $1,000. And I'm still very optimistic about this platform. But today in this video, I will reveal one very big and serious problem you may have if you invest with Fundrise, and how public REIT can help you to fix this problem. Fundrise is one of the oldest and largest real estate crowdfunding platform. Everybody is talking only about its advantages and great opportunities for real estate investment. And at this moment, my portfolio on Fundrise worth about $130,000. That's what I have after 3 years of investing with Fundrise. I have about 223 active real estate projects all over US, and my total net growth in 2018 is about $40,000. That's not bad if you take into account that you don't deal with tenants, don't fix any rental home problems. That looks like a perfect way to become a real estate investor. But after a serious investigation and some videos from Graham, Stepan and Andrei, Jikh, I realized there is a serious issue which may stop me and you from investing through Fundrise at all. So the problem is in freezing your money for months or even years. Fundrise call it a ramping up stage. So look at this ramping up. What does it mean when a fund is ramping up? If the initial phase of a fund in which it's focused primarily on raising capital and acquiring projects. And why is it a problem for you and me as investors? Lower returns are expected during this early period of time. And by saying lower, I mean miserable returns, as identifying properties, closing on acquisition, and executing business plans, construction, leasing. It takes time to yield results. And unfortunately, this phase typically lasts around 12 or 18 months. However, this may vary by fund. So what is the reason for such a situation? Can you do something with it and make your money work? Spoiler, you don't control anything, and the money put into the platform is invested according to a plan, and investors don't have any control over which REITs the plan selects. And all that you can do, just watch how they broke down this in a different real estate tiers or classes. And also what you can do right now, just to smash the like button to signal YouTube algorithm that it's a good video for all real estate Fundrise investors. I appreciate your help, guys. Don't wait, just smash the like button. Okay, but let's come back to different real estate tiers that Fundrise have for us. Fundrise has 3 tile classification system. Operating. These REITs are live and fully operational and are in the profit maximization stage. Stabilizing. These REITs have several positions and are starting to bring in returns. And the last one, the worst one, ramping up. These REITs are accumulating capital and have yet to make many, if any, investments. So typically, if you put money into a Fundrise platform, it will put most of your money into operating REIT, some of your money into stabilized REIT, and a small amount into ramping up REIT. Not very small, like a 75% of your money can go into ramping up REIT, which sucks. I don't know about you, but I have absolutely no interest in watching some of my money sit in Fundrise's coffers where it's doing nothing. Okay, I get that they need to drive cash into some of the newer REITs so they can make investments. But you know, it's not my problem as an investor. It's not a great argument why I should wait years for money to start working. One more proof that Fundrise is designed for real estate investors who have a minimum time horizon of 5 years is that you will not be able to cash out any earnings immediately. Investors can take advantage of liquidity quarterly for REITs or monthly for E-funds after they bypass a minimum 60-day waiting period. So if you got at least $500 to invest in the real estate and you don't mind letting your money sit for multiple years, real estate investing could be a good choice for you, and Fundrise works for you. Fundrise ultimately selects and manages the real estate projects you are invested in. And the only one thing you can actually decide how much money you want to invest with this platform. So, in my opinion, that's pretty serious and big issue with investing through Fundrise. But I'm happy that there is one solution. Okay, what is the alternative solution to escape this problem? Actually, you can't call them and put them asking invest immediately in active projects. There is no number to do this. So the only one solution I see: investment in a public REITs, real estate investment trusts. It's a way to invest in the real estate like in a stocks. Basically, REIT owns income-producing real estate and you, as the investor, own shares of REIT. And these shares pay out dividends and naturally have market value. So the majority of REITs out there are publicly traded on the stock market and giving them a high degree of liquidity. If you want to get out of investment, you just have to sell your shares. It's the first reason why REITs are better than Fundrise, because of its liquidity. And with Fundrise, liquidity is not guaranteed at all and very expensive, but with the public REITs you can buy or sell in a few clicks of your mouse. The second reason why REITs are better investment is that it have lower fees. The management cost of public REITs is commonly around 0.5% per year, compared to 1% for Fundrise. So in other words, Fundrise is 2x more expensive than your typical public REITs. That's a very big difference that significantly impacts returns in a long run. And public REITs are more cost efficient because they enjoy a larger scale. The third and the biggest advantage of public traded REITs is that they are able to access public equity markets, to raise capital and to grow faster. And as long as they are able to raise capital at a cost that's inferior to their expected returns, they can earn a positive spread that leads to a cash flow per share growth. Okay, let me show this example. It's a little bit complicated, but I will do my best to explain it in an easy way. Okay, so Realty Income commonly sells new shares which, combined with the debt, has a 4% average cost of capital. It then reinvests this capital into new properties at a 6% cap rate. So it leads to an immediate 2% spread that benefits all shareholders. That's how publicly traded REITs are able to grow cash flow per share by 5–10% per year, despite only enjoying 1–2% annual rate increases. And this is the main reason why private real estate funds underperform publicly listed REITs in the long run. It's not uncommon for public REITs to grow cash flow of 5–10% per year. In comparison, Fundrise can expect to grow closer to 2–3% per year. It's a big difference that adds up over time. But on their website, on the Fundrise website, they're selling us a little bit different numbers, like a 10–9% per year. But I trust my real investment return performance after 3 years of investment. So look at this number. It's only 7% per year, comparing, for example, to Vanguard VNQ RT, very famous, very popular, with about 30% per year in a long run. Okay, and the last but not least, investing with Fundrise means for you and me a lack of focus. Most publicly traded REITs specialize in one specific property sector. So, for example, Independence Realty Trust, IRT, only buys Class B apartment communities in Sun Belt markets. Another example could be, let's say, a Store Capital, STOR, which only invest in net lease properties of middle market companies. And this specialization allows them to build competitive advantages through better expertise, scale, and connections on a specific market. Not surprisingly, specialized REITs have far outperformed diversified REITs over time. So today, diversified public REITs that lack specialization are hated by the market and commonly traded at a large discount relatively to specialized REIT. Many investors don't like Fundrise for the same reason. It invests all over the place and therefore it has no competitive advantage in today's highly competitive marketplace. That's why public REITs are better in some ways than Fundrise, because REITs charge lower fees, it can do spread investing to boost cash flow growth, it has specialization and competitive advantage. And finally, you have a high level of liquidity and control. I hope you found my video useful and helpful if you're investing in ERAT and Fundrise. Follow my link in the description if you want to open Fundrise account and pay 0 advisory fees for 90 days. And thank you for watching, guys. Peace out.